Look, we sort of continue to run on fumes here, or the fumes reality for you when it comes to AI, or indeed big tech being a safe harbor, but also a growth play as well?
Yeah, well, I'm always very excited about the technology sector. Even when it was tanking last year, I kept saying what a great opportunity it is, especially if you're in it for the longer term, of course, because the day-to-day swings can be a little daunting. But of course, technology is the way of the world, and there's more of it coming, especially with AI, where we're going to have another transformation of our lives and the entire world. So it is very exciting indeed. Just have to have a little bit more information. There's a lot of unknowns at this time.
There are, and it means, therefore, for some like Citi saying, this has gone too far, we're likely to now see a downward trajectory, perhaps, as these AI, artificial intelligence headlines become steeped within business models. Do you think we've run up too far for what ultimately gets painted as the clear picture of what AI does to these companies?
Well, when it comes to buying stocks, the math has to rule, and clearly the earnings are just not living up to the valuations at this time. And unfortunately, that's what counts when you're buying stocks. And so, yes, there's a little bit too much excitement going on here, and that will account for a great deal of ups and downs and significant volatility. I mean, when you have eye-popping returns of over 100%. Year to date, and then you look at last year and down 50%, those are pretty big swings, and an investor would have to have pretty strong stomach lining to be able to put up with that.
I mean, I'm just looking at the price to forward earnings on Apple, currently trading at in excess of 30 times. This is a company that's going to post actually a decline in revenue for this fiscal year. Is, though, a company that has just got that sheer market weighting? Can you fight against what have been sort of, well, many are terming them sort of the Super 7 or the Magnificent 7 key stocks that have just driven the outperformance across the S&P and indeed, of course, the NASDAQ this year?
Well, we're still in the business of meeting clients' long-term goals, so we tend to take a little more prudent approach and maybe buy companies that engage in AI and all of the excitement, but not necessarily depend solely on that revenue. They have to be more diversified and have earnings and revenue from other sources as well. I think that's probably the most prudent way to enter this arena. But for the most part, we're going to be a bit more wait and see, because we still, quite frankly, don't know the good, the bad, and the ugly of what AI has to give to us or bring to us in the next few years.
And what, therefore, of the good, the bad, the ugly when it comes to macro picture as well? Today, we see services weakening. Overall, we're worried about whether the Federal Reserve hikes interest rates further, actually is forced to start cutting them. How does that guide you as to whether technology as a sector is the place you want to be?
Well, I do believe that the Fed will pause, just as Mr. Powell indicated, and I don't believe there will be any rate cuts, at least not anytime soon, and certainly not this year. But technology is a sector that is here to stay. I mean, this is clearly something that we live with, and it is involved in every aspect of our lives. So it's not going anywhere. And in fact, it's going to evolve even more and faster. So it certainly is the longer term outlook. But again, longer term is the emphasis, because the day-to-day swings can be extremely volatile, and it's not for the faint at heart. You do have to have it in a longer term perspective.
And across asset, are you thinking long or getting into technology stocks that, of course, are diversified, or is it more about the bond market, different parts of their overall capital structure? Where do you think is the right place to be allocating at this moment?
Well, for the longer term, certainly technology stocks are the entire tech sector will be terrific. However, shorter term, we are taking a much more defensive approach and going on the fixed income side, or the structured note side. And I think that can create a little bit of an offset for all of that up and down, the daily up and down, and the crazes, and then the downfalls.
And to that point, this is a global narrative. We've seen AI sort of take wind, whether it's in Asian names or whether it's being traded here in the United States, even some European chip stocks getting caught up in it. But Do you allocate primarily to the United States, Nancy? Do you think about diversification globally?
At this time, we have stuck mostly with U.S. We have not ventured into outside of the U.S. too much as of yet. I don't believe the valuations there are going to be as profitable as U.S. There's many more problems outside the U.S. than what we have here. And also, the currency exchange plays a very big part of it still, unfortunately. And when the dollar is still this strong, it's very hard to bring alpha into the portfolio of investors.
How many of your private wealth clients are still interested in crypto?
Well, all of them are. They all are. They all ask questions about it, but I'm fascinated by how little they actually know about it. It's fascinating. And I think every new craze or every new headline du jour really indicates that how little people actually know about what everybody's jumping into. And that's pretty fearful, in my opinion. We have to be very fearful when that happens.